Can you get rich from Bitcoin in 2024? This is what experts are saying on the future of Bitcoin. Bitcoin, the first and most well-known cryptocurrency, has come a long way since its creation in 2009. As of 2024, Bitcoin's value has seen significant fluctuations, but it remains a key player in the cryptocurrency market with a substantial market capitalization of $1.3 trillion. Many experts compare Bitcoin to digital gold. They believe it can serve as a store of value in the digital age. Prominent investors like Paul Tudor Jones and Michael Saylor continue to praise Bitcoin's potential to hedge against inflation. Paul Tudor Jones, a billionaire hedge fund manager, has compared investing in Bitcoin to investing in early tech stocks. He sees Bitcoin as a way to protect wealth in uncertain economic times.
And clearly it's winning the race against gold at the moment, right? Yes, I would think that would also be a very good inflation hedge. It would be my preferred one over gold at the moment.
Michael Saylor, former CEO of MicroStrategy, has made significant investments in Bitcoin, viewing it as a superior store of value compared to traditional assets.
It looks to me like the protocol is working. It's the most successful monetary protocol in the history of the world. It's gone from 0 to $1.4 trillion in 15 years. It looks like it's on a path to go to 14 trillion, and I don't know why it wouldn't go to 140 trillion.
He believes Bitcoin's fixed supply and decentralized nature make it an ideal long-term investment. In recent years, we've seen a surge in institutional interest in Bitcoin. Companies like Tesla, Square, and even traditional banks like JP Morgan Chase are now exploring or investing in Bitcoin. Analysts at JP Morgan have noted that Bitcoin could compete with gold as an alternative currency. They see the potential for Bitcoin to reach new highs as it gains broader acceptance and more institutional money flows into the market.
Yeah, so this is an important thing. This is the last time I've ever talked about this in CNBC, okay? So help me God. Blockchain is real. It's a technology. We use it. It's going to move money. It's going to move data. It's efficient. We've been talking about that for 12 years, too, and it's very small. Okay, so I think we've wasted too many words in that.
Just a quick note, if you enjoy this type of content, consider subscribing, as it helps out a lot. Bitcoin's potential impact is particularly significant in developing economies. Experts like Jack Dorsey and Ray Youssef believe that Bitcoin can provide financial services to the unbanked and underbanked populations, offering them a way to save, transfer, and receive money securely. Dorsey, co-founder of Twitter and Square, has been a vocal advocate for Bitcoin's role in promoting financial inclusion. He argues that Bitcoin can empower individuals in countries with unstable currencies and limited access to banking infrastructure. Despite its potential, Bitcoin faces significant challenges. Regulatory uncertainty is a major concern. Governments around the world are grappling with how to regulate cryptocurrencies effectively. Regulators worry about issues like money laundering, tax evasion, and the use of cryptocurrencies for illegal activities. Stricter regulations could impact Bitcoin's growth and adoption as one of the main impacts to economic growth in government regulations. Another major concern is the environmental impact of Bitcoin mining, the process by which Bitcoins are created and transactions are finalized. The energy-intensive process of mining has drawn criticism from environmentalists and policymakers, as about half of the electricity used is generated through fossil fuels. Experts are exploring ways to mitigate these environmental impacts, such as using renewable energy sources for mining operations. While the future of Bitcoin looks promising, it's not without challenges. Market volatility remains a significant concern. Bitcoin's price can experience dramatic swings, which can deter some investors and users. For example, the price of Bitcoin dropped from $30,000 in 2020 down to $16,000 in 2022 and ranged between $20,000 to $40,000 in 2023 and is at almost $68,000 today. Security is another critical issue. While Bitcoin's blockchain is highly secure, the ecosystem around it, including exchanges and wallets, can be vulnerable to hacking and fraud. Cybersecurity experts emphasize the importance of using reputable platforms, enabling two-factor authentication, and storing funds in secure, offline wallets to mitigate these risks. In 2024, Bitcoin has been experiencing significant developments that are shaping its future. One of the key events is the Bitcoin halving, which occurred after the 840,000th block was mined, reducing mining rewards from 6.25 BTC to 3.125 BTC per block. Historically, Bitcoin's price has surged following halving events, and this year experts are optimistic about a continued upward trend, with some predictions suggesting prices could reach $250,000. Additionally, the approval of Bitcoin exchange-traded funds in the U.S. has been a major milestone. This has attracted substantial institutional investment, with Standard Chartered Bank increasing its year-end price forecast for Bitcoin to $150,000, driven by the strong inflows into these ETFs. The bank also forecasts that Bitcoin could reach $250,000 by 2025 before stabilizing around $200,000. Also, the geographic decentralization of Bitcoin mining has continued, with significant mining operations now distributed across the US, China, and Russia. This has enhanced the network's security and resilience, making it more resistant to attacks. The increased use of renewable energy in mining operations has also been notable, with over 54.5% of Bitcoin mining now powered by renewables as of January 2024. Bitcoin's future is both exciting and uncertain. While it holds great potential to transform the financial landscape, it also faces significant hurdles. My personal advice would be to always diversify and use logic. Do not simply put all your money in Bitcoin, as it can be a risk. Yes, according to experts, you could double or even triple your money by 2025, but you need to always keep in mind the possibility of not making as much as you hoped, or even losing money. By diversifying your investments, you can lower that probability of losing everything due to one bad investment. I promise you can never go wrong with this advice.